Welcome, Solid Source. We are super excited to be here today with Jahani Christopher, who comes to us from Smart Financial and Tax Services, where he has been an accountant for 30 years. He's also a real estate agent, so he brings a unique perspective to all of us. So super excited to have you here with us.
Thank you so much. Glad to be here.
Absolutely. And tell us a little bit about your journey into real estate and accounting.
Well, I started school, Georgia Tech, Wayne State University, Atlanta Area Tech. Actually, aviation was my first love, and I switched over to my minor back 1992. We got started. I got started with two other people. And then 1993, officially, we got moving on, and we started the business there. About the year 2000, we had about 3 offices. We were going good. And now we're down to 1 office where we just kind of focus on our tax planning, tax advice, and also the in-year taxes. We also do all 50 states in terms of state tax returns. And we have about 20 clients. We have about 20 states that we do out-of-state tax returns.
You're obviously doing something right. So what made you decide to obtain your real estate license?
Well, that's a good story. Some years ago when I got started, I would do tax returns for for real estate professionals, And during the time that I would do the work, I would have clients come in. The clients ask for everything. And they said, do you know any real estate people? I want to buy a house. I say, yeah, I got some people here. I have about 8 to 9 people. So I would refer these people over to the agents. And guess what? The agents never called them back.
No.
So at one point, I decided, I was sitting there working one day, and a ton of bricks hit me and said, why don't you get your license and your real estate license, and maybe you can offer this in-house. So that's what I decided to do, and the rest is history.
Incredible.
Yes, sir.
Now, as an agent and as a broker, I get this question a lot from new agents, especially their first year in real estate, but can apply to everybody, about LLCs.
Yes.
And is it smart to form an LLC in terms of commission payments, or just keep it simple and keep it in your individual name?
Let's say LLCs, the main objective of LLCs is to protect your assets, meaning that if you had an LLC and let's say someone started to sue for your personal items, they would not be suing Derek directly. They would be suing your company. And this is where LLC protects people. Let's say you have another situation. LLC is very good to start your business plan. Business plan meaning your EIN, eventually go over and get to the banks and start your business account for your company. So, and the reason why I use that to run into another area that I hope I'm not getting ahead of you, but LLCs structures your business. It structures you. It gives you a relationship with the banks.
Right.
You start your business banking account, credit cards, checking cards, whatever. But at the end of the day, you have records. My LLC people, we push them in our office, record keeping. This is what the IRS wants to see. So it just opens, it makes you a broader base.
Right. I tend to hear of it more when agents start to close more and more deals. But even if it's just a few deals, you could still choose to form the LLC. What you said makes sense.
It does. Before that, when I'm talking to someone that wants to open up an LLC, let's say they're a real estate professional, my key thing to them per the IRS is, did you perform 750 hours during the year, which is about 93 days? Or are you 50% in the business? Because if you are, now you're talking about your non-passive deductions that you can get.
Now, let's say that you change mid-year from your individual name over to an LLC. Does this pose a problem, or should an agent plan to, if they're thinking about the LLC route, should they just plan to wait and start in January of that following year?
Best to start in January, that beginning of the fiscal year. But if a person wants to start the LLC, let's say June, that gives them 6 months. I would say, yeah, go ahead and do it. I wouldn't say do it in November, because now you're talking about 2 months that you're trying to establish this business for the prior year. I would say start at 6 months to the beginning of the fiscal year.
Great advice.
Thank you.
And what Jahani is talking about, of course, is tax advice. Now, some agents will think they need to form an LLC and they need to advertise, or they want to advertise that. So just going to throw in that the Real Estate Commission does allow agents to be paid through an LLC commissions, but one of the things that they are not supposed to do, at least here in Georgia, is that entity is not supposed to be engaged in real estate activity. So we really aren't supposed to advertise that and hold that out to the public. It's really kind of a behind-the-scenes tax thing. So just want to throw that in. Now, most agents are going to be 1099 independent contractors.
Yes.
And a common question, and this might be a kitchen sink type answer, but what can they write off on their taxes? For example, license renewal. Some agents will ask about taking clients out to dinner, vehicles.
If you're okay, there's about 29 in our office. Is about 29 different deductions that a real estate professional can take. Meals are interesting. Let's take that for a few seconds. There are people that I take you out for lunch, and you're my cousin, and we talk about real estate. The cousin is actually going to buy real estate. We have a agreement on the table. Then that meal deduction, or that meal, is deductible because we encountered business talk about real estate. I have a signed contract as a buyer's broker's agreement, and at the end of the day, I take that receipt. I make the copies of what we did. Better yet, I make notations on that receipt or somewhere that this person was doing business, even though it's a relative. On the other hand, that same relative, we just went and we watched the game, or, Georgia. We watched Georgia, and then he says, well, I'm thinking about going out to buy some real estate. And then we decide, well, okay, yeah, we'll go one day. And then I go in to try to deduct that. It's not deductible. So we have to be very careful how we notate our businesses. If you're meeting and you have lunch and you talk about business before and business after, is deductible. And if there's an agreement that's in place, it's definitely deductible.
Is there any kind of limit, though, on that? Let's just say that becomes excessive. Any kind of cash limit on how many meals you can write off in a year?
Excessive use is you have to, when you structure your business, you have to think about what things look like on paper. I mean, if you didn't make any monies for the year, but yet you have $3,000, that's going to be somewhat of a red flag.
Right.
When we send the work in. Hopefully we don't send that work in. We have a discussion with the client. That's part of our tax advice.
So those are, you said 29? That's a good number, roughly 30 items that could be deducted.
That's correct. Entertainment now, I think since 2018, entertainment is no longer. So we can't just take someone to the football game, give them some tickets, and say, hey, look, I want to be your tax professional. That's no longer. The IRS canceled that out.
Right.
That was in the new tax laws that came about.
And about vehicles.
Vehicles, okay. What's that question?
Can agents purchase a work vehicle, so to speak, to use for the real estate business? And can that be written off in some way?
It can. It's a couple ways. We stress in the real estate industry to our clients to use miles. You have an option of using miles or the vehicles, miles, or let's say oil changes, mechanical repairs. You can do one or the other. So I start with the new agent. We starting to set up the vehicle information. You can either do miles or you can do mechanical deductions such as oil changes, tire rotations, new tires, stuff like that. One or the other. We suggest miles because you're going to drive more. And at 57.7 cents per mile, that adds up.
Right. Part-time agents.
Yes.
So if you haven't had any closings and you work another job, which is not uncommon in our industry at all, does this impact anything when they go to file their taxes?
Yes and no. Material participation, let's go back to that. If they material participated in that real estate transactions for the year, let's say 50%, even though they have a full-time job, part-time, if they can prove that they've worked 750 hours during the year for real estate, they can get a deduction. It would be a passive deduction, but if they can prove that, then they can get the full non-passive deduction where they'll get the full limits to deduct all their expenses. There's nothing wrong with not making money within the year. It's just the material participation. They have to material participate. Otherwise, that business is looked at as a hobby business from the IRS. It's something called a hobby business. So people cut grass. Sometimes they cut grass today. They may not cut grass the next week. And, I don't want to put that on people that do that type of business, but we have to be careful to be involved. Material participation is what I'm saying. Again,
I'm learning so much from just chatting with you. How do you prove it, though?
How do you prove it? Records, record keeping, documentations, internet, transactions through the phones, text messages, not so much, but emails that provide putting you in the involvement in the transaction with the real estate would be great. Just want to go to a quick note. Material participation includes real property activities, real property development, real property redevelopment, real property operation, and real property management. So there are some categories that you want to put yourself in, even as an investor the same way. You want to get the non-passive deductions, you want to be involved completely.
Interesting. Now, you mentioned investors.
Yes.
So switching gears just a little bit.
Okay.
You probably do work with a number of real estate investors. We certainly have a number of investors, not uncommon for agents to invest in real estate. So going back to LLCs, how often would you recommend to an investor to place ownership of their rental properties into an LLC?
Each time they buy a new property. So if an LLC is required for property A1, I would say get an LLC because it would be a separate entity. Therefore, when we get ready to do the business, it's separate. We do the income versus deductions and go from there. Property A2, I would do the same thing. Property A7, I would do the same thing. So use the LLCs. Plus, if I'm in property A1 and I fall and break something, I'm going to come after you.
Now, but what if you're not buying these properties in cash and you are receiving financing to purchase these investment properties? Can you still put them in an LLC?
I'm hearing that you can. I have a couple of mortgage people that I've talked to, and they said you can do it. You can use an LLC.
So maybe check with your lender.
Yes, there's some creative lending, I'm sure, that can get that done.
Okay. Now, depreciation is a magical word for so many investors. So depreciation on these rental properties can be leveraged to decrease overall taxable income, from what I understand. So can you talk about that and offer any tips for investors?
Well, first, depreciation is 27.5 years you can deduct over that period of time. Now, if you plan on keeping, my first thing to a person when they have a property, they bring it in, they want to depreciate. I say, how long are you going to keep the property? If you're keeping the property for 5 years, it's very doable, and you can just move on and continue. If you don't keep the property for that 5 years, then you're going to have this. There's a recoup penalty. You're going to run into a depreciation penalty. Let's say
I
it that
see.
way.
Very interesting. Now, Airbnb has really exploded over the past couple of years in popularity. So, any specific tips for Airbnb?
First thing I'm finding out is Airbnb around the state of Georgia now is limited. They're saying that it might be less. You might know that.
There's some counties like Fulton County who have changed their policy on Airbnb, so that would be something that an investor would definitely want to look at specifically for that county.
I would use the same plan going towards the LLC again. I would use that same model to say that get an LLC, set the LLC up, get the EIN number, and then go ahead and start that banking. You want to do an operating account, you want to do a reserve account, and you also might want to do, just an account for drafting, period.
Okay.
When you need quick cash. Well, that's going to be same as reserve. So there are some type of accounts you should have with an LLC, not just go in there and say, oh, okay, here we go. There's an operating account, and there's some reserve accounts too that you should set up. Yeah.
That relationship with that banker is going to be really helpful.
Exactly.
I can totally see that. Now, going back to more traditional real estate business for a moment, when it comes to gifts, it's not uncommon for agents to give gifts to their clients at closing, and this is a deductible item.
It is a deductible item. Cash, I think it's $25. And just regular gifts that you might give your clients is deductible in gift forms, such as, if I do a closing for you and then I buy you this nice address plaque. Let's say the plaque is $200, then that's deductible.
Nice.
Yes.
Now, is there anything that we haven't covered that you would like to talk about or share with us?
Besides the deductions, 29 different deductions, that's probably the most important thing. And also the material participation is very, very critical.
So super important for an agent to reach out and talk to maybe yourself if you happen to be their accountant or the accountant that they have chosen.
Exactly.
For specifics. And a lot of agents probably try to do their taxes themselves. And my guess is you probably don't recommend that.
Unless you're very skilled and have an accountant look over it after you're done. I would not, with the new tax laws in place, Congress is changing tax laws as we sit here and speak. And things are going to change even till December and after midterm elections, if I'm okay to mention that. We're going to see some more changes. So I would say get with a tax professional and go over what you're trying to do. Because we can save you a whole lot more money than you would because we know the different tax laws, and that's important.
That is important. So, again, thank you so much. I have learned so much from you. If you are a listener or a viewer and you wish to reach out to you,
yes, you can reach out to us in a few different ways. smartfinancialbusinesses.com is our website. You can also go to smartfinancialtax2@gmail.com. And you can also give us a call at 404-292-0551. And you can also text us on that same very number.
Awesome. Thank you so much.
Thank you. Thank you for having us.
Absolutely.